This example starts with a relatively horizontal range in between the sharp end to an uptrend and the rapid start to a downtrend. A moderately sized base trend to a minor retracement forms a fib extension with extra validity for the 0.236 and 0.786 levels crossing near the boundaries of the gap down. There is an excellent balance between the proportions between fib levels and not being too wide or too narrow, partly because point 3 is a swing point just before the gap down accelerates. The one level did strongly oppose the downtrend, but short-term price action had large bearish candles continue to gradually close lower after the gap down as bearish volume increased. The end of the downtrend was the site of the less common 2.272 level, where the bullish reversal candles began to flatten the downtrend towards the start of September, with a rapid shift to more bullish volume. Using the small retracement after the gap down produced similar results, but was not a first choice since it resulted in narrower proportions between fib levels from a relatively small base trend distance. A fib projection using the first fib extension's base trend also produced similar results due to the balanced proportions of the base trend. If there weren't gap downs in such quick succession, the fib projection using a smaller trend near a fib retracement level would have likely performed better with its narrower proportions. Moving down to the next swing point close to the next fib retracement level was the better choice since it widened the distance between fib projection levels. This was most suitable given the conditions of large bearish candles and gaps, accelerating the downtrend to cover wider price ranges, going down even lower to swing points closer to the 0.786 fib retracement level, reduced precision with the projection levels because proportions started to become too wide. However, results were still sufficient for approximating areas of greater opposition to the downtrend. A gap down fill after a relatively flat bearish reversal range provides suitable conditions for a fib projection to estimate areas of opposition to the likely continuation of the broader downtrend. A large fib retracement in conjunction with fib projection levels is generally less precise in narrowing down areas of greater opposition to the downtrend. There are swing points close to the fib levels of both fib techniques, but volatility is quite high with wide and sharp swing points in the previous uptrend and new downtrend. Further imprecision comes from the widening distortion of the gap down. Interestingly, projection levels from the large fib retracement perform well. This is primarily due to the more suitable, wider proportions between fib levels as the downtrend continues to have rapid and sharp price fluctuations. Precision is still lowered even with close proximity to the 3.618 projection level of the smaller fib projection. This is to be expected due to the volatile conditions at the time. The upper 30s was also an area of major support since it was the site of the key upswing in September 2017. However, it is still possible for a strong trend to break past this area, even with strong confluence of the fib levels. A fib retracement based on the gap down and small retracement suffers expected imprecision due to the distortion from such rapid price fluctuations. Using a larger retracement improves performance because point 3 is at a more suitable area at the gap down fill. That is a key part of the downtrend's continuation context. This leads to more appropriate positioning of the fib extension levels based on the proportion of the base trend that still uses the initial gap down drop. As usual, a fib projection using the same base trend as the fib extension can be simpler. especially when there are several possible points for point 3 to mark the end of the base trend's retracement. In this case, a less common scenario has a trend line quite reliably identify several areas of potentially greater opposition when intersecting with projection levels